So you're gonna ditch that kitchen with the 70s tile. It's time for it to go. But you don't have funds and you have less than stellar credit? Well, don't worry. Today we're gonna talk about how to get a home improvement loan with bad credit. I'm Carol Ann Reed with The Real Deal, where we give you the confidence and the clarity that you need to make the right real estate decisions for you. And if you like this kind of content, feel free to go down below and hit the subscribe button. So you've got home improvements to make, but you don't have the funds, less than stellar credit. What do you do? Well, first of all, if you can put those improvements off for a little while, even for a few months is helpful. The first thing that you should do is try to repair that credit. And there are several steps that you can take that will help tremendously, even over just a few months' time. Check your credit reports. Make sure that there are no errors on there. There are free sites out there. You have the ability to get your credit report at least once a year for free. Check it out. Make sure that there's nothing wrong. If there is, write to those companies and get those errors taken off. Make your payments on time. That's a really important one. If you haven't been doing that, get on an automatic payment so it takes it out of your account automatically so you're never late. Make sure those are timely. Pay down your debt. If your credit cards are maxed out, anything that you can do to bring down those balances, credit cards like to see that you're not all maxed out. And certainly stay under your credit limit. If you go over your limit, that's a huge knock on your credit report. So even if you can't pay down the balances, at least don't go over your credit. And there are places, there are apps like Credit Karma and Credit Sesame that can help you monitor your credit and help make suggestions even as to where the areas are that you can improve, and they will help you do that. So check those out for sure if you can do that. But if that is not going to be helpful for you in the short term, there are some things to consider first before you decide which route to go as far as which kind of loan to get. First of all, how fast do you need that money? Do you have some sort of bigger repair? Did your furnace go out or something like that you need the money right away? Some places will take a while to process an application, and some places you can get it right away, usually at a higher interest rate, but you can get it right away. So how fast do you need it? Do you need the flexibility of fixed payments? For instance, for home equity loans, there's a home equity loan and a home equity line of credit. A line of credit is a variable payment because the interest rates vary. But a loan is a fixed amount. So does that matter to your budget? What kind of payment can you afford? There are some with shorter term loans out there, but those usually come with higher payments. They probably have smaller interest rates because the risk is less. But because it's a shorter term, the payments are going to be higher. So if you need a lower payment, you need to be looking for something with a longer term. And just so you know, some of these loans have interest rates as high as 36%, which is a little crazy. So I just want you to not have any sticker shock here. So what are your options? There's actually quite a few. First of all, try a credit union. There is a bunch of them out there, and they are actually known for having slightly looser requirements for those loans. So you may be able to get away with a slightly lower credit score. If your renovation is on the smaller side, you don't need a ton of money, just, a couple $1,000s for some new appliances. Try your credit cards. I know that that's usually not considered a great option, but if you think about it, use your credit cards and then make those payments on time. You could actually help rebuild your credit score in the process to kill two birds with one stone. You can try store credit. For example, Home Depot has home project loans up to $55,000. So give Home Depot a try. I know Lowe's has one as well, and you may have local chains as well that have some. Give it a shot. You could add a cosigner. Find somebody, a family member or a friend who has a better credit score than you do, to co-sign on that loan for you. That way their better credit score will also be taken into consideration in the granting of that loan. One caveat though, if you miss a payment, they are on the hook for that loan. So just be very careful if you're going to choose that option. You could get a personal loan, and you can get them secured or unsecured. A secured personal loan uses collateral, something like your car, to back up that loan. An unsecured loan is one that doesn't have any collateral to back it up whatsoever, except your word and your income statements, which probably will also mean that an unsecured loan is for a lower amount. Next, let's talk about government-backed loans. The government actually has a good number of programs out there for people who need that little extra help. One thing to keep in mind, though, is that with a government-backed loan, it's usually a longer process to get it through, so it's going to take some extra time. So if you just want to remodel your kitchen and you don't need it done next week, these could be a good option for you. First, FHA 203K. That is a mouthful, and it is a loan option where you can either when you're buying a new house, or you can refinance your current house into it. That will give you a loan up to, I believe it's $35,000 that you can roll into the mortgage. And FHA also has something called a Title I loan. It is a home improvement loan to substantially protect or improve the basic livability or utility of the property. Kind of sounds like it's pretty much anything that you could need. And you can get one of these Title I loans up to $7,500 unsecured, meaning no collateral necessary. And for you folks out of the city and more of the rural areas, there is the USDA 504 loans and grants, actually. But you have to be in a rural area. There are income caps on it, and you have to not be able to get affordable credit elsewhere. So now let's talk about tapping into your home's equity. If you've been in your house for a while and the value's gone up and you have equity sitting there are ways that you can tap into that to get the funds that you need. So there are basically 3 ways to do that. One is a home equity loan. That will give you monthly fixed payments just like any other personal loan. There is a home equity line of credit, a HELOC, H-E-L-O-C, HELOC. That is more like using your home's equity as a credit card. You take out only what you need when you need it, and you make payments on the balance that you have remaining. Those are variable payments, though. That interest rate can go up and down. Or you could refinance the house. You could get a brand new mortgage, take that equity out as a cash out lump sum. That will give you a larger loan amount if that is something that you need. And if your interest rate is a little higher right now and you haven't refinanced yet, the low rates that we have right now mean that you could actually take that chunk of money out, do that cash out, and get a payment in the end that's similar to what you have now. Go check with your banker, but that certainly is a possibility at this point. And here's one that a lot of you may not think about too much, but you can get a loan on your 401k. Now, there's pros and cons to this, and I am not a tax person, and so you definitely want to go talk to a tax person about this. But if you've got a chunk in your 401k, this is a possibility. So there are pros and cons. There's no credit check. The interest that you pay on this loan actually gets paid right back into your 401k account, and no taxes or withdrawal fees if you repay according to the terms of the loan. And there are cons as well. First of all, you're going to lose the power of compound interest if you keep money out of that account for too long. The loan maximum is only 5 years, and those terms of that loan will shorten if you quit or get laid off from your job. Before we get to the last one, do me a big favor and go down below and hit that like button. And the last one is a little bit different. It may not help you get funding, but it certainly could help you lessen the amount of money that you need to get. And that is learn to do some of the work yourself. Become a DIY person. Paint, flooring, refinishing your cabinets. All of that can be done without a licensed contractor. And YouTube is an excellent source to go find videos that can teach you how to do some of that. When I bought my first house, I wanted to add a bedroom and a bathroom in the basement. And I literally learned how to sheetrock by watching a VHS tape from the local library. And so it just shows that you can actually get some of that knowledge yourself, which will reduce the amount of money that you need to go borrow from somebody else. So if you've decided that you are ready to go out and do your best to try to get one of these loans, you certainly can go to websites like NerdWallet or Bankrate. They will give you lots of options of places that you can go to apply online for a home improvement loan. I will also put links in the description below to a couple of different loan sites that service loans specifically for people with bad credit. Feel free to go right up here if you'd like to watch a video that YouTube has picked out just for you. And you can go right next to me here and hit the subscribe button if you'd like to see more content like this. I will see you guys next time.